Are you looking to buy a home? If so, there's two main loan types you need to understand: FHA and conventional. And today, I'm going to break down the key differences between the two and help you decide which one's best for your situation. I'm Brandon. I'm with Texas Lone Star Lending, and we're here to be your loan educator. So what is a FHA loan? An FHA loan is a home loan that is backed by the Federal Housing Administration, which means the government is providing insurance to the lender in the case that the borrower cannot repay the loan. And because of that additional protection, they're designed to be more accessible by allowing lower credit scores, smaller down payments, and higher debt-to-income ratios. They are especially popular with first-time home buyers who need a little more flexibility, but they are not designed only for first-time home buyers. And here are the FHA base requirements. It requires a minimum credit score of 580 if you want the 3.5% down payment. You technically can go down to a 500 credit score, but you then would need a down payment of 10%. They allow debt-to-income ratios somewhere around the 55% range, and these are only for owner-occupied purchases. You cannot use this to buy an investment property, for example. And they do require upfront mortgage insurance premiums that are equal to 1.75% of the loan amount. And you can either pay this at closing or you can roll it into the loan. All right, now let's talk about conventional loans. What is a conventional loan? Well, it's a loan that is not government backed, and it follows the guidelines that are set by Fannie Mae and Freddie Mac. And because there's no government insurance behind it, lenders typically look for buyers that have higher credit, stable income, and a larger down payment. The trade-off is that conventional loans usually offer better pricing for buyers that are more qualified. And once you reach 20% equity in the home, the PMI you are paying drops off. And here are the base qualifications for a conventional loan. It requires a minimum credit score of 620, a minimum down payment of 5%, and a max debt-to-income ratio of 45%. And what's the best use case for a conventional loan? Well, if you have a higher credit score and you have the ability to put down more at closing, this could be a great option for you. Also, side note, that just because Fannie Mae or Freddie Mac, or even FHA for that matter, have these base qualifications, a lender has the ability to go in and put in what's called overlays. And these are additional requirements. So for example, for a conventional loan, just because Fannie Mae and Freddie Mac say that, hey, a minimum credit score of 620 is required, a lender could go in and say, you know what, we're not going to lend money to anybody that's lower than a 660 or 700 or whatever the number may be. So just be aware of that. So how do you choose between conventional or FHA? Well, if you have good credit, you can make a bigger down payment and want to avoid long-term mortgage insurance, using a conventional loan makes a lot of sense. But let's just say your credit is lower, or you have a smaller down payment, or you have higher debt-to-income ratios and you need to go FHA. FHA is a great loan, and I know as of a few months ago, I think it was 80% of homes are purchased using conventional, but that doesn't mean that that's the best loan for everybody. Because let's just, for example, in a scenario, let's say that you can either buy a home today using an FHA loan, or you have to wait a year and so you can qualify with a conventional loan. Let's say, for example, a home is $300,000 and you purchase it today with an FHA loan. We know that homes increase by price on average around 3% per year. So that $9,000 in equity you could have gained by buying it with an FHA loan is now lost, and you're now buying a home that's $9,000 more expensive if you wait a year. And with that said, there is no one-size-fits-all loan. What may be good for you could be totally different for somebody else. It all depends on your financial situation. And you should always compare total costs versus how much per month. And if you have any questions, please feel free to reach out. We answer general questions. If you're looking to buy a home but don't know where to start or how much money you need, we can help you assess your situation and create a roadmap so you are ready to buy in 6 months, a year, whatever your timeline is. My email is brandon@lonestarlending.com, and my phone number is 512 261-1542, extension 106. Thank you.